Hello, I'm Angela Barnes and welcome to Beat the Street, the show that gives you all the tradable news and data ahead of the Wall Street Open. Well, coming up on the show, shares in the US rose to record highs on Friday, fueled by tech stocks and rising hopes about the economy. But will it continue this week? Meanwhile, global leaders in business and politics have wrapped up the World Economic Forum in Davos, Switzerland. We'll be discussing with Chris from Tasty Live the soft landing for the US economy that many delegates there were forecasting. And three major central banks are due to decide on their monetary policy this week. First on Tuesday, the Bank of Japan, followed by the Bank of Canada on Wednesday and the European Central Bank on Thursday. Well, we are 1 hour away from the start of the US session, and this is how equity markets are looking. Well, first of all, let's have a look at the S&P US 500, and it's set for a higher open, up 0.37%. Meanwhile, Wall Street set for a higher open, Dow Jones up 0.26%, and the tech-heavy Nasdaq as well set for a higher open, up 0.62%. Well, investors will no doubt be looking to build on the S&P 500's fresh all-time high on Friday. Well, let's go to senior market analyst Axel Rudolph, who has more on the S&P 500's record close.
Yes, Angela, the S&P 500 is really on everybody's lips because basically it hit a new all-time record high, as we've mentioned last week, and in doing so it rose not just above the previous high we saw at the beginning of this month, around 4,800, but also above the January 2022 high. That was made around 4,817, I believe. And you can see here on the daily chart, we really rallied very strongly to the upside. And at the moment, we're even seeing in overnight trading a gap forming here as the S&P 500 is probably heading towards the psychological 5,000 mark. And you can see here, if I zoom out onto a weekly chart, the advance we've seen take us above the high seen back in January of 2022. And basically, as long as we stay above the current January low at 4,664 or so, further upside is most likely in store for the S&P 500.
Well, thanks very much, Axel. Now, the World Economic Forum in Davos, Switzerland, has come to an end, and many of those in attendance last week talked about how the US economy is heading for a soft landing. They talked about cautious optimism among the economists there last week. They said that US consumer spending is proving to be more resilient than that in Europe as well. Well, let's bring in now Chris from Tasty Live. He joins us from New York. Chris, so economists kept repeating that buzzword last week, the soft landing will come to AI. That was the other one last week afterwards. But with regards to the US economy, what's the markets expecting from the next Federal Reserve meeting?
Well, the next Federal Reserve meeting next week, in fact, is not likely to bring any sort of change in terms of rates. There's less than a 5% chance that there will be a 25 basis point rate cut according to the Fed funds futures curve right now. If the Fed were to do something, the markets actually push back against the idea that it could be in March because the economy is holding up. Last Friday, and I mean not just a few days ago, but the Friday before that, there was an 81% chance of a rate cut in March. As we look at the market today, that's down to 47%. Why? Because U.S. economic data has been holding up. The Atlanta Fed GDP Now growth tracker for the fourth quarter is looking at a 2.4% growth rate. Of course, GDP is due out later this week for the initial reading. When you look at the labor market situation, 3.7%, that's still very healthy and definitely within the range that one would consider to be part of a soft landing narrative, which in my book, by the way, means inflation gets defeated, unemployment rate stays below 4.5%, and growth slows but doesn't turn negative. And that's exactly where we are, because when you look at inflation and the trajectory that it's on, 3-month, 6-month annualized measures of core inflation, or even the Fed's preferred gauge PCE, are quickly trending back to or already below 2%. I think people are going to be surprised by how quickly the inflation fight wraps up in the first few months of this year. So soft landing, I mean, you could argue that we're not really going through a landing, but that's definitely where we are right now. That's a good place for the economy. This nice healthy zone between the end of the hiking cycle and the beginning of a cutting one is a time that stocks usually like, and what's not to like while the economy is outperforming everyone's expectations.
Okay, Chris, well, thank you for that. And the other thing I just want to talk to you about is AI, because that was the other hot topic in Davos last week. And of course, this week, the Magnificent Seven companies kick off as well, their earnings, starting with Tesla. What can we expect from their financial update?
Of course, there are various idiosyncratic risks when you go from company to company, but the fact of the matter is earnings season is off to a good start, and those companies that have some sort of AI angle within their business plan right now, they're doing really well. I think about the BOTS AI ETF, the Global Robotics AI ETF. That's up nearly 30% from its lows back in the fall. When you take a look at Tesla or Nvidia or Microsoft, these shares are obviously doing very, very well. It was the TSM, the Taiwan semiconductor earnings actually last week, that vindicated the idea that AI is not just a narrative, it's something that's substantively impacting companies' CapEx plans. And I expect that we're going to see that this week. So right now, with Microsoft up at all-time highs, Nvidia closing in on all-time highs again, pre-market here, there's really no reason to disagree with the narrative or try to fade it at this point in time. Are there legitimacy concerns? Of course, but now everything apparently is awesome as stocks hold on to their highest closes ever.
Okay, Chris, well, thank you very much. We'll definitely be keeping across that. And I know you will be in New York, and we'll be coming back to you again. So, Chris from Tasty Life, thank you very much for those updates and the insights there. Well, moving on, and we've got three major central banks due to decide on their monetary policy path as well this week. First, on Tuesday, it will be the Bank of Japan, which will also publish its quarterly outlook report. It will be followed by the Bank of Canada's decision on Wednesday and the European Central Bank's decision on Thursday. Well, if we put aside the Bank of Japan, we can say that the market expects rate cuts soon, and maybe sooner than what central banks are now planning for. Last week, for example, Fed board member Christopher Waller said the path of policy change must be carefully collaborated, not rushed. Atlanta Fed President Raphael Bostic said inflation could seesaw if the central bank cuts rates too soon. In Davos, European Central Bank President Christine Lagarde said that too optimistic markets won't help the ECB inflation fight. Well, the Bank of Canada is expected to keep its overnight rate forecast at 5%, leaving borrowing costs at a 22-year high. Latest data showed headline CPI growth accelerating to 3.4% in December from 3.1% the previous month. And economists predict that inflation will eventually return to a target rate of 2% by 2025. Well, in the meantime, inflation is expected to be a bit higher at around 3.5% until mid-2024. Now, if we look at the US dollar Canadian pair, currently up 0.07% on the day, snapping a 2-day losing streak. Well, moving on to Thursday, and the European Central Bank is also expected to stay put with its main refinancing rate forecast to remain at 4.5%. Deposit facility rate, well, that's expected to stay at 4%, and the marginal lending rate at 4.75%. Well, the question remains, when will central banks start lowering rates? At the end of last week, Christine Lagarde said that it's likely that the European Central Bank would start cutting rates this summer. Investors will surely expect the ECB president to expand on this during her press conference on Thursday as well. And if we just have a quick look at the euro US dollar price chart, the pair is actually lower on the day, currently down 0.12%. It has been on the rise, though, since the 19th of January, although it has edged lower since early trade on the day, as you can see there. Well, as for the Bank of Japan, well, inflation data published last week could give the Bank of Japan a bit more time to phase out its monetary stimulus, keeping alive market expectations that the central bank will put short-term interest rates out of negative territory around April. And now key short-term interest rate, well, that's expected to remain minus 0.1%, with 10-year bond yields targets to stay at around 0%. And if we just have a quick look at the US dollar Japanese yen, also down the pair on the day, down 0.28%. The Japanese yen as well might struggle today, as expectations as noted that the Bank of Japan will not pivot away from its ultra dovish monetary policy stance on Tuesday. Well, let's move on now to United Airlines, because a spokesperson from the company said overnight that it is cancelling all Boeing 737 MAX flights through January 2026. His decision followed an announcement from the US Federal Aviation Association, which issued a safety alert for operators, disclosing some airlines have conducted additional inspections on the 737-900ER mid-exit door plugs and have noted findings with bolts during the maintenance inspections. Well, if we have a quick look at the all-session stock, it's currently down 0.77%. Okay, well, let's move on now to Meta, because shares in the Facebook's parent company Meta fully rebounded after its terrible year in 2022 and closed Friday at a new record high of $383.45. Well, let's pull up the Meta price chart here and have a look. Its share price pre-market open currently up 0.95%, but since the end of November 2022, its share price has gained some 320%, rising about 194% last year. Well, the metaverse push proved unpopular among investors, it seems. However, the focus now on artificial intelligence seems to have turned the tide for Meta, and the company's fourth quarter and full year 2023 financial results will be released after market close on Thursday, the 1st of February. But let's have a look at some US earnings this week, because things are really going to step up a gear. Let's have a closer look at a few of them, starting with Netflix, because it's scheduled to report its earnings on Tuesday after the close of US markets. The Street expects earnings of $2.20 per share on revenue of $8.71 billion. Well, Netflix's performance in the third quarter 2023 was really quite remarkable. The company achieved an impressive 8% growth in revenue with a net addition of 8.76 million paid memberships for Q4. Well, Netflix had previously said that it anticipated the continuation of robust user growth momentum. And according to its own forecast, Q4 revenue is projected to increase by 11% year over year. And the net addition of paid memberships is projected to be close to the previous quarter as well, potentially with another 8 to 9 million new subscribers. Well, let's have a quick look at the Netflix price chart as well. The stock is currently up 0.74% since the start of January last year. Its stock has gained about 68%. So let's see how it moves after those results. And moving on to Tesla now. Well, the electric EV maker will also update the market with its report for the fourth quarter. Analysts anticipate earnings of 72 cents per share. Revenue is seen at $25.52 billion. Once again, one key metric for investors is margin. Throughout the year, Tesla has been cutting its vehicle prices, focusing, as Elon Musk pledges about 12 months ago, on sales rather than margins. Automotive gross margins topped in Q1 at 30%. They were down at 16.3% in Q3. Investors want to know where the bottom is. So let's have a look at the Tesla price chart now as well. It's currently up 0.19% pre-market. Its share price has also gained since the start of January 2023 about 120%. Well, it's also going to be a big day for the airline sector on Thursday. The main company releasing quarterly results being American Airlines. Earnings are expected at 11 cents per share. Revenue should come in just over $13 billion. Strong demand, both domestic, is likely to be played in American Airlines' favor, but the market will be looking at the total value per available seat mile for Q4. It's expected to be down between 5.5% and 7.5% year over year. And if we have a quick look at the all session stock on the IG platform, it's up 1.76% on the day pre-market. Okay, well, let's have a look and move over to commodities quickly and take a look at how US crude is doing at the moment. Well, it's currently up marginally, just 0.02%, and it's trading around $73 a barrel. And if we just have a quick look at Brent as well, also slightly higher on the day, trading around $78 a barrel. Well, last Friday, Baker Hughes's total rig count increased to 620 last week from 619 the previous one. The number, meanwhile, of active oil rigs fell by 2 to 4. Well, that's all we've got time for this afternoon on Beat the Street. Thank you very much for watching the show. Do keep across all the IG platforms for updates, market analysis and insights. And thank you very much for watching.